Welcome everyone to part 2 of our risk management video. So in part 1, we told you guys all the strategies and tips on how not to overtrade, over risk, how to get out of that emotional trading. So we know it's easier said than done. So in part 2, we're going to show you exactly how to do that from a simulation style.
Absolutely. It was a great idea from Sharma. Hope all of you guys are doing well. So we're going to break down GJ right now. This is February 2017, February 15th. Yeah, this is a Wednesday. So I'm actually going to just jump over to the New York session just so that we can start breaking the chart down together. This is the Asian session. And then 1300 is New York Opens, which is 6 a.m. Not New York Open, but pre-New York. So this is the monthly chart that we're breaking down right now. As you guys see, February 2017, price is just completely bullish, right? And I believe Brexit was going on at this time, right? Brexit 2017, yeah, February 2017. So Brexit going on right now. We have a massive bull run right over here. We get this rejection wick, it seems like, only because you got this bearish candle right here. Strong body as well with a wick to possibly fill if we don't form a support over here. So let's see what ends up happening. This candle looks bullish over here. I don't know if it created this top wick first or the bottom wick, but right now it is a weak bullish candle over here. Is there anything that you want to add?
So just from a fundamental side, like you mentioned, there was Brexit. So people were starting to vote on Brexit. There was already policymakers talking around what is the EU and the UK going to look like after Brexit. So going back and forth on those. Another thing is this is around right after the election. So this is when the Trump administration came into the office a month earlier. And so this is still when people are wondering what's going to happen with the US dollar's position as a world reserve currency. And that is because of the take that Trump administration had already expressed when it comes to international trade with the US, which means that Trump has always wanted to keep the dollar cheap. He has always wanted to make it more accessible to export and import goods, make it cheaper for other countries to import goods from America. So that's the take that we have from the fundamental side. And the reason why that affects GBP JPY is because right after US dollar, the second position comes usually the yen as a safe haven currency.
Yep. And then also around this time, February, he got in around January. And then when February came around, I know when it comes to the military side, that's when the US really started going after ISIS. And we basically took ISIS out within a year. But that's when obviously you got geopolitical pressures going on as well. So you just want to keep that in mind. So again, looking at the monthly, we are bullish. Looks like we're rejecting this area over here. So we'll see if this is a support to continue bullish, or are we going to continue down and fill this wick? So looking at the weekly over here, we are rangy a little bit. We have a bullish big belt right over here. So normally when I see a bullish big belt, when candles open up, and this has to do with the higher time frames, but when candles open up about 300 pips below the previous close of this bearish candle, normally whatever whatever color or whatever way that candle closes, whether it's bullish or bearish, it ends up going that way. So this could be a strong support over here. We could be holding support right over here, filling this wick over here, and continuing right back up to retest these highs over here. So let's mark our support off. You got this bullish big belt over here. And we got our highs over here, significant areas. And then we got one more resistance right over here, previous rejection area with this bearish candle to the left. So again, is there anything you wanted to add?
That's about it. And again, just pay attention to kind of the market structure. Last zone that you made right there, that's the key level that we need to break. So then we know that's a continuation up bullish. If it does not break that and we consolidate, then you don't essentially have a trade.
Exactly. So this is a very key area right over here. I want to see the price. At that time, 144.500 is a significant range. And right now we're at around 142.500 right now. So let's clone this stuff over. Looking at the daily over here, again, you got this resistance over here to the left that price rejected multiple times. And then we have a higher low over here. This was that bullish big belt where price opened up way lower than this candle, and we
Mhm.
ended up just pushing bullish, and we had a massive bullish move after this. Let's say this candle closed, we had a nice about 700 pip move up to retest this previous resistance over here. So we got a support right here to the left. If you look left, it matches up with the previous support to the left as well.
Right.
Now we have some sort of a resistance over here. You got that doji, sort of like a evening star, if that's what you want to call it.
Mhm.
And we could either be continuing down from over here. You do have this EMA that you could look at, but we'll see if price continues bullish from the support to the left. Very
So
simple.
since this is the daily time frame, another level that I would personally mark off to start looking for any scalp opportunities or anything like that is right underneath actually, which is going to be right about here. Are we going to break below this little support? And then if you extend it over, then you would see that, it's tapping right
Mhm.
into that resistance. Are we
Yep.
breaking below that support? If we are, then you have that nice sell off to the downside. So that's that one thing that I would pay attention to.
Absolutely. And then when you were saying that, I was looking at this level as well.
Right.
These candle body closes, we are forming that resistance over there as well. So we got a previous support, and support over here, and then now we're reacting to that level. So we'll see what we get on these two levels. We'll clone them. And
Yeah.
those of you that don't know, this is Soft4fx. It's a simulator, and we've done a couple
Yeah.
simulations on this.
There's videos up on our YouTube page with our simulation sessions.
Exactly.
The easiest way, if you're struggling to kind of find your strategy, like for me, one difference that I do see, even though Stefanos and I trade kind of similarly, he does have, as you can see, like a couple of moving averages and things like that. Mine, you would see like completely naked. But the point being is both of us, the core of our trading is price action. That's all you're going to hear us talking about. If there's any moving average, if there's like fibs, if there's like, anything else that you may see on other people's charts as you're going to go through YouTube, you're probably going to see a lot of that. The core thing that you want to pay attention to is your trades are based off of price action, not a trend line that, bounces off of this, then you're going to take a buy or sell, or not like because of an indicator or anything like that. But you're going to see us with our slightly different trading styles a little bit, that 90% of the time we're very similar. And if you're kind of
Absolutely.
struggling to figure out what's your strategy, use basic structure, right? What I want you guys to pay attention to here is as we come down onto the time frames, pay attention to what's the market structure like. Here are some resistance and levels that we have marked off, and see how price reacts to those levels.
Absolutely. Yeah. And it's funny that you say that because we were going over that in on the live stream today
Mm-hmm.
of how, you can use whatever indicators you want. And I'm sure a ton of you guys, you find a mentor and they teach you the way they trade and they introduce you to their indicators. But the one thing is, and there's nothing wrong with indicators, but the one thing that you want first as a base, as a foundation in your knowledge of trading is basic price action. You need to know how to read candles, how to read wicks, and understand where price is going without any of that stuff. If you
Right.
want to use Fibonacci's, there's no problem with that. Like, they do make sense, but you need to know how to read price action and read a naked chart and predict where price is going to go, or at least have a good idea of where price is going to go first before you start adding those things. So that's what we're teaching you in this little mini course that we're doing, is
Mm-hmm.
how to read price action and also how to think in the markets as well, which is basically the main point of what we're doing, but
Yeah.
which is the most important.
Be as analytical as possible. Only look at what is the market telling you and trade based off of that. And that's exactly what we're going to show you in the simulation session.
Exactly. So it does look like we're consolidating over here. We did have a resistance over here to the left that price broke out of, and
Mm-hmm.
you could call this a fake out or whatever you want to call it. Everyone has their own terminology, but price came up, broke above that resistance over there, and reacted to this level over here to the left, which we pointed out on the higher time frame on the daily that this is a significant level over here. So it kind of came right back into that range, but we're gonna get rid of this just because it makes it so messy. We'll see if price is holding support right here and continuing right back up because it is following a bullish trend, printing higher lows and higher highs. So we'll see if price closes above this range. This is the 4 hour again, so maybe we could get a ride up to that area, but it is messy price action to the left over here. So looking at the 1 hour, Gonna scale
This is where
fix.
you're going to start coming down to figuring out where your scalp opportunity is going to be. So start
Exactly.
narrowing down at this point, where's the price action, majority of the price action that's happening. So you got your resistance. If you extend it over, you'd see how price, comes very close to it, taps right into it with that major top wick. Um, and then, price consolidating a little bit, collecting orders. Another thing to note is anytime the market wants to retrace or consolidate, that's just market collecting orders. It's only going to do it two ways.
Exactly. Exactly. So we have this support right over here to the left.
There you go.
Price kind of just holding that area. Obviously, very messy over here. It's very tough to scalp this because you're just kind of in this range. You got big wicks, small bodies. It's just a little messy over here. But we were consolidating over here, and then we broke out of it with this candle over here to the left. So are we kind of retesting that area to continue right back down to possibly mirror this move over here, retest this level to form support, and then continue up? Or is this our support to continue up? And then we could take our move based on if price does close above this area over here.
There you go.
So price, it looks like we could be retesting this area. Again, this is 6 a.m. Eastern Standard Time. So it looks like we just formed a resistance right over here where price could be retesting this consolidation area to the left. Nice clean candles. Price could form a top wick over here and then continue right back down. But
Right.
I don't know if this is something that you want to trade in because you got about 20 pips right here, but I don't know if this is worth taking, right? I'm looking for a close above this area, right, for price to continue right back up and form support over here, retest this area to continue up. Or if we break below this area, you got a clean move to the left, you might be able to grab a quick sell scalp over here to bring price down to this level over here around 141,800 to then form support and continue up. But you do have this area to the left that you want to pay attention to.
Right.
Trade based off what you see. Looks like price is flipping bearish to continue right back down to this area. But so this is one of those setups over here where you feel enticed to trade it, but you don't have to. You can wait for your setup, and a lot of people do that. Looks like we could be forming support over here, but we'll see. It's not that I'm going to take anything, but this isn't something that you need to take.
Just from market structure perspective, what I see here is got a massive push up, the market's collecting orders. And then from here, when we drop down, I'm looking to the left. Where's price making a resistance? It's making a resistance right into this consolidation area, right? And that is a resistance in the past as well for all this consolidation. As you can see, simply all you're doing is just look at the details. You got a bottom wick rejection, you got rejections being made here, and then same thing here, you made a new low, you're breaking the lows here. So now what I'm looking at is the next major support area for me to take any sell opportunities is going to be just extend this over exactly where price is breaking out right now. If it can close below this area and continue back down bearish, then we have a sell opportunity. But this is price breaking out of consolidation. A lot of the times, and you can test this when you go back, is a lot of times when price breaks out of consolidation, there tends to be a ton of volume that follows, especially if that same consolidation is being shared from the hourly time frame, 4-hour time frame, and even the daily time frame.
The longer the consolidation, the harder it breaks out.
Right.
The more orders it's grabbing.
Right.
So let's see what we get over here. Are we going to close below this area? You got a clean move to the left over here that you can at least take down to this resistance over here. Anywhere in this area. This is a key area to me. This thing is clear.
Now,
yes,
in a situation like this is when I would drop down to the 15. I would wait for at least the 15 close. And then I look for a top wick rejection on the next 15-minute candle to take the entry to the downside.
Yep. So this candle ended up passing the low of this candle right away. Now, I'm completely fine with missing this trade if it just does that. but most of the time this has no bottom wick. Most of the time it's going to come down, grab liquidity, and then come right back up to retest this previous level. And then plus, this is a strong level, so I'm pretty sure it's going to retest that area at least with a wick. So we'll see if price comes down, but this is my key area right down here to take price down into.
So coming back to the strategies that we discussed in our last video, the more analytical perspective that you approach the markets from, the better off you will be, right? So right now, you didn't miss any move. I know a lot of people are going to look at that retest. They're going to see this breakdown. They're going to think like, man, I just missed a move. You didn't. Because look right now, what price is doing is it's creating a support. It's breaking the highs. It's coming back up to test that zone. Once it creates a resistance, then that's that move. Right? So that's how you get out of that emotional trading. What is the price telling you? What is the market telling you? Right? The market's telling you haven't missed a move. So don't fret it.
Too many people look at this in a negative context where it's like, oh, I missed it. Like, what am I going to do? And then guess what? You end up selling down here.
Yeah.
Just wait till price retraces. Don't get the FOMO. And then if you get your setup up here, you just got in at a better price and you didn't lose a trade.
Right.
So this might be a perfect opportunity for us to show you how we manage risk if this does turn the other way, but we shall see. So we got a bearish candle forming over here. Nice clean move to the left. This is the prototypical setup that you want to look for every single time. It's the golden setup. So I'm actually going to enter right here. It should be forming a top wick somewhere in here, but you can enter dynamic risk right now. When the candle closes, you can enter another one when candles form that top wick, and then when we pass the low of that candle as well.
Yeah, so I would personally look for, go ahead, Stephanos. But I would personally look for an entry once this area here is broken, just so we can break the low of the previous bearish candle wick right here. So we have our confirmation, price did drop down. It did come back up to create that resistance. So simply all you're doing is look at market structure. You broke out of consolidation, price made a low, pulls back, lower high, comes back down, lower low, making another lower high. And now as it continues down below this area, that's where I would like to take an entry and a continuation down.
Absolutely. And then you can also grab the buys up if you get a nice support formed over here, and then you have a sense that price is creating a higher low over here and then continuing right back up. Now, for the sake of this video, I'm going to enter right now so that maybe, obviously if you're right, then we can just manage risk on my trade and we could just show exactly what the way we would manage this. So looking over here, and then my take profit somewhere down here around 141, 750. Let's say it's 760. Got a clean move to the left. I do think price is going to come down into this area at least, and then form a support to maybe continue right back up. So
and this is an easy 3-to-1 that you see right there. An easy 3-to-1 risk to reward.
Yeah. So I'm gonna just enter 1% on this one, and then if we get that top wick forming and I like it, and price is starting to come right back down, that's where you use the lower time frames. Then you can enter another position. And you said you wanted to wait, right?
Yeah, I'm gonna wait.
Okay, cool.
There you go. It's pushing up. It's rejecting.
It just rejected a little bit right here. I'm just gonna slow it down.
Mm-hmm. And now we're already going in, and we already know how many trades we're looking for. Stephanos took his first trade. He's already talking about his second trade. Pre-plan so you don't overtrade.
Exactly. And you just go based on your plan and you stick to your word. That's it. I may wait for this candle to flip, but I want to see if it keeps rejecting and base it on the time, because this candle just opened up.
Mm-hmm. So another thing that I want you guys to pay attention to is you got wicks rejections right into that area. You got a support being formed. You had a break and retest to continue down. And that's the same area where market is kind of collecting orders to continue back down, right? So that's already giving that entire confirmation of that bearish structure that we would look for.
Yep. And now we have a plan for the trade. Now we also have a risk management plan. So if this 15-minute ends up passing the high of this candle right here, I'm just going to close 50 and let the rest run. There's still a high probability that price will come down and retest these lows, but you just cut 50 just because your probability of that trade just went down.
Mm-hmm.
It's all about managing your capital.
Yep. And just understanding what are the candles telling you.
This is perfect, a perfect example for managing risk over here. And no hesitation either. Cut off 50 and that's it.
So here's another slight difference, and you're going to notice that. So I'm pointing these out because I want you guys to realize that no one trades the same. Stefanos and I, we trade similar, but we have a lot of different strategies. Stefanos is comfortable with closing 50% of his trade. If I were to close 50% of my trade, I know from a psychological perspective, I'm becoming 50% less confident in my trade, even though we did this entire analytical process, right? So I wouldn't have closed the 50% of my trade here. Instead, all I'm looking for is, okay, what is price from an analytical perspective telling me? If price were to break above these highs that we keep tapping into, especially when the market's consolidating here, if we break above this, then I would just close out my entire trade. I don't close 50% of my trades, right? But for me right now, all it seems like is price probably coming back just to grab some liquidity from this like 3 candles that closed up here, or the fourth candle that started here, this little bit of consolidation that you're seeing. So market probably just coming back up to grab liquidity, create another on a lower time frame, create another high, and then continue right back down.
Yep, absolutely. And again, like you said, like everyone's got either, even if we trade exactly the same, we have different risk managements, and everyone does. Like no one trades exactly the same. So don't think that like if you have a buddy of yours that you trade with, or maybe your mentor, that you guys have to trade the exact same way. That mentor should be teaching you how to build your own strategy instead of teaching you how to trade the way that they do, because risk management, it can't be exactly the same. We're never going to manage a trade exactly the same. So just keep that in mind and move along that way. So I already have 50% off. Yeah, I agree. Price is probably doing the same exact thing. I want to look at the 15-minute.
So now that we're starting to like tap into those resistance areas, starting to break above, now I'm comfortable with price, taking me out because I'm keeping it tight enough so that, if price goes the other way, I'm not incurring huge losses, but I'm giving it enough room to retest those areas, giving enough room to, reject or anything that it wants to do.
Yep. And now with me, I would be cutting another 50% right around here. And now if price starts going the other way, I still have that percentage on the line, and I could just re-enter once price starts coming this way, breaks these lows down here, and then continues down.
Think about those strategies that we've discussed. I mean, Stefanos has given you some tips. I've given you some tips. But remember, you can use a mix of those. You can modify those according to whatever your risk management is like. Right? So don't think that you're going to have to trade exactly like Stefanos or exactly like myself. You never can do that. We can never put down our entire thought process and tell you like, this is how you should trade. We can just give you tips from our experience, and that's how every mentor is.
Exactly.
So we're starting to create some bottom wick rejections. We're still rejecting that little resistance area. For me, I'm looking at where are the candles closing. So the previous bullish candle still closed below the zone, even though it made a top wick rejection. So I want to see where is this candle going to close, and then that's going to kind of determine where we headed.
And that was the 5-minute. So the 15-minute just closed bullish over here. So I'm going to cut out the entire thing now.
All right.
And there, you formed a support right over here. So price, it looks like it already formed its bottom wick, and it could be continuing right back up into this range, and this could be a fake out. We're also in a bullish trend right over here, actually on the 1 hour, where price is forming these higher lows.
Right.
Actually, the 4 hours as well. Wow. So we have our low right down here. We're printing higher lows. You got this area right down here. We got a new higher low over here. Price formed respected this support over here, and then it's just pushing up this way. So we could very well easily be faking this area out and continuing right back up, grabbing liquidity and continuing up. So what I did was I just managed my risk. This is a strong 30-minute candle, even though it's still below the support and it rejected. It's still a strong candle where a price could just fake out and continue right back up. So let's look at the trade that we just took. Let's see.
Another thing that I want you guys to pay attention to is he managed his risk so well that now he's sitting at a negative 0.72%, not even a 1%. this trade very easily for a lot of people, if you don't know how to manage your risk, very easily this could have just turned into a -3%, -4%, -5%.
Yeah, you guys could have been, let's say, looking at this setup right over here, clean move to the left. You see your perfect setup. You get a 15-minute candle close in your direction with a wick to fill.
Hmm.
And you guys are all getting all giddy. You're like, oh my
Yeah,
God, I'm going to risk 5% on this. I can't wait. No, what we did was we used dynamic risk where I entered as soon as the candle closed. That's part of my rules. Nice, strong 15-minute candle, but it's still only a 15-minute candle. So the
right,
confirmation isn't as strong. So I only enter 1% instead of 2%. Right? I would have entered another 2% if I saw, price starting to reject in this area over here and then flipping bearish. And then I would have entered maybe another one to make a 3% as we passed the low of this candle. But
mhm,
instead, I risked 1% and I only lost 0.7%.
right,
Right. So now if this setup ends up going our way, continuing down, we can obviously enter this and we get more confirmation, then make that back plus more. Or if we get a trade later in the session that's our setup and we like it, we could just enter that one and we'll
right.
make up for it in that way instead of just like praying and hoping that this is going to go your way.
Yeah, so that's pretty much just go from an analytical perspective, just look at, what's the market telling you. In this case, you saw kind of both ways, people who don't take trades, people who would have taken the trades, right? So in my case, I was like, I'm not taking a trade until that wick is broken.
Yep.
Steph knows same strategy that we're using. We're going through the same process. We're mapping out the same zones. We're having the same thought process. But for him, he's seen a similar setup where he's comfortable taking a trade wherever he did take a trade, right? For me, I'm not comfortable in taking that setup because I'd rather wait for that one extra confirmation that's going to tell me like, okay, it's going to go my way.
Exactly. Exactly. Couldn't agree more. That's how it is, and everyone's got different perspectives, so that's completely
Yeah.
fine. Now, as you guys can see over here, we rejected this level again, and this is the 15-minute. This is the 5-minute. So now we're getting close to this support again. This is where you could possibly make your trade back. What time is it? It is 7:20. So normally get some good volume over here. We're passing the low of that candle. I want to wait another 10 minutes to see if this candle closes below this area. Now, because this is my second trade, this is my second entry. So I wait for extra confirmations when it comes to a second entry because I already took a loss. So I'm just going to wait and see if price closes below that area. Got another 10 minutes. And if I miss it, price just drops and takes it. I'm not, entering. I'm not going to get FOMO because I'm sticking to my rules.
So what you're seeing here is, again, just I personally just look at the candle closes. What I see here on this time frame, again, is just candles closing right into this area. All I'm seeing is wick rejections. I'm completely fine with that. But as long as this area is being respected with the candle closes, I know that price is going to continue down. So again, I would wait for the same exact thing that I've mentioned. If price can break below here, then I would look for another entry. But what you're seeing now here is we took a trade and now we're looking for a second entry. So I know a lot of you are going to have questions about, well, like if I messed up on the first trade, then how do I take a second entry? This is how you're going to see it.
Let's check it out. So now it looks like we're rejecting that support a little bit. We're over here on the 5-minute.
Mm-hmm.
This is why you guys can drop down to the 5-minute because you can see, how price is reacting in that area, even the 1-minute if you want. You just got to be careful on those, and you can't take trades based on the 1-minute if you haven't back tested it.
Yeah, 1 minute or even 5 minute, it can get tricky. 15 minute is very tricky for a lot of people.
Yeah.
So just wait for your confirmations across time frames like we are. Even here, even though Stephanos is on the 5-minute, he's waiting for the confirmation. He's looking at, are we rejecting the same levels on the 15-minute, on the 30-minute, on the hourly? What are we doing?
I'm looking at time. I'm looking at 7:30 over here, waiting for that.
Mm-hmm. So look, you got that massive top wick rejection. Price is trying to continue down from here. And then let's see if we're going to continue breaking that support. If not, then from my side, it was a no trade day. And then from Stefano's side, you had one trade, but how do you re-enter that?
Yep.
If you have the opportunity.
Now, I want to point something out to you guys too. Now, if real quick, I'm just going to pause this. If this candle closed bearish with a wick to fill, and this candle, like let's say that this candle right over here doesn't have a bottom wick, and it's just let's say that this wick isn't there. I know that. Oh, actually, you know what? What am I doing? There you go. So let's say that wick isn't there, right? And this wick is down here. If this candle ended up forming like a top wick over here, like a small top wick, like something like this, and then ends up passing the low of this candle right there, I would enter as we broke the low.
Right.
That's my setup. I actually got that on gold today in the live market, but this is my setup. But you need to make sure that this wick is right here. I don't know if you guys can see my cursor, but you need to make sure that this wick is there. If there's no wick on this bearish candle, and then let's say there's a wick right here, that's a reversal and price going to continue up, kind of like the way it is right now, right there. So just keep that in mind.
Mhm.
So it looks like we're just messing around over here.
Yeah, it seems like we're going to come right back into the range because the 15-minute, that's a massive bottom wick rejection. Usually when you see that, then that means that price is going to continue the other way. We already have an example of that. If you look up top here, you had a very similar example.
Yeah. Yeah, absolutely. And I think this is also a good example for like re-entry on a trade. You know, there's a reason I didn't enter when we broke the low of that candle, right? A lot of you guys may end up doing that, but that's why you want to wait for that close below this area now, and you want to wait for candles to close on the second entry. If you're giving,
Especially if you're so close to a 30-minute close or an hourly close, you want to wait.
Yeah, 100%. So we got that 30-minute close. We got a gap.
And now we're coming right back down to fill that gap. Let's see if we're going to break below that zone again. That's the only way that the sells are valid. Other than that, it would have been a no trade day.
Yep. And I'm not looking to take any buys over here either, just because we fill that wick.
So from the previous video from part 1, which was about how do you get out of emotional trading, over risking, over trading, how do you basically apply that, and how have we applied that in the simulation session here? We planned out the trades. We told you guys exactly if price breaks out of this level, does this X, Y, and Z, that's when we're going to take the trade. And that's exactly what we did. You didn't see us taking random trades here. We are already pre-planning. Stefano said, if price, I'm going to take an entry here. If price makes a top wick rejection, continues down, I'm going to take another entry here. And he already mapped that out. So that was him planning out exactly how many trades he's going to take. That's how you avoid over trading. You tell yourself and you make a plan, trading plan, whatever it is you have to do. You only take the trades that you have planned for. Just because the market is moving a certain way, it doesn't mean that you jump in. You don't have the confirmation for it. And then how do you avoid over risking? He has a risk percentage. We only risk between 1 to 3%. So that's all we do. That's how you avoid over risking. He went in with the 1% risk. He knows he's only going to be risking between 1 to 3%. So with every trade that he was taking, he was only going in with 1%. And once he maxed out at that 3%, that's it.
How can I put this? Like, just as you guys have values in life, whether it's like as a business person, a family member, brother, sister, you have a value system, right? That you stick to, and you don't break that for anything. So it's the same thing when it comes to your trading. You have conditions on your trades, and you're not going to break that whatsoever. Yes, it's a simulator, but did you see, me, because I was taking the trade, did you see me get, excited or, pissed off or anything like that? No. And I treat this like a real account. Whenever I'm back testing on this simulator, treat this as real as you can. Journal the trades, right? Study the trades that you take on here, because it's just like the live market, but make it as real as possible, just like any kind of simulation. Like if you're a pilot, you're a flight simulator, you're in a flight simulator trying to get that experience in. It's the same thing with this. So treat it like a live account. But again, what I was saying was, you need conditions on these trades. And if price does a certain thing, I waited for a price to close below this area before I re-entered. And I didn't do it because I didn't get what I wanted, right?
Right.
All you got to do is trade what you see, not what you think is going to happen. You got to wait and see what you wait for and what you have written down on your trading plan of what you're going to wait for as well.
Exactly. So just wait for that and then wait for the movement. At this point, like that's a no trade zone for me. Price is already in there. If we're going to continue trading throughout the session, then again, just look at your levels. Is price rejecting that? At this point, there's no info trade opportunity. right? If price does break back down below the zone, I want to see a break and retest happening there. As we're going up to higher time frames, now we're coming up to the 4 hour time frame. You see that price goes back and taps into the same exact area. Can you go back to the 4 hour time frame real quick?
Sure.
So in the 4 hour time frame, you see how price is consolidating on the 4 hour, and then it drops back down, taps into that zone, and whatever trades that we've taken here, we're on the bottom wick rejection of this 4 hour candle, right? So that everything that has been happening has only been happening in this 4 hour candle,
Yep.
right? So now what I would want to see is price continuing back down. I want to see price dropping below this again on the hourly. If you're trading rest of the session, that's what I'm giving you the tips for. And also, I want to see some break and retest. There's no opportunity for any impulse entries at this point. We've broken below that level. We've seen that level being respected as resistance. And then we saw price coming right back into the zone. And now it's kind of just, messing around there. So at this point, you wait for your confirmations.
And one thing that I want to point out, actually, a mistake that I made was this is why it's so important that you want to check all your time frames right before you're entering a trade one more time. Just because you do a top-down analysis in the beginning of your session doesn't mean like you're all done with that. Like right before you enter your trade, in my rules, I have that you got to look at all time frames real quick, do a quick glance of 4 hour, the daily, the 1 hour, because it could change by the end of your session by the time you want to take a trade. So what I did was, I probably wouldn't have taken this because I forgot the fact that this candle, this 4 hour candle, had no bottom wick, and we're in an uptrend over
Mhm.
here. We're respecting higher lows, so I should have hopped up to the 4 hour to check that really quick. But what we did do that was right was we waited for the retest, and that's why we waited for the retest. We didn't take a breakout entry because I remembered that we had no bottom wick over here. But throughout the session, throughout that trade and planning it, we forgot to check the 4 hour time frame,
Mhm.
and we forgot to realize that. I probably wouldn't have taken that sell, especially because we're in a you know bullish trend. I would have, if this candle had a bottom wick, that would have been a different story.
Yeah.
There's no range anymore. So this is 50-50. It could go anywhere. Plus the fact that the higher time frames over here, we're consolidating,
Mhm.
right? It's a tricky area to trade in as well. But that was a perfect example when it comes to risk management and a good thing for you guys to see.
Yeah. So again, just go back if you need to. Just watch the simulation session a couple of times. But this is where we're showing you. It obviously wasn't the winning example that you would see, like with a lot of simulation sessions that are being put out there. This is real life, what a lot of you, I'm sure, go through, right?
Yeah.
And this is what we go through as well. So you saw the subtle differences in both of our thought process here. Exactly how would we manage our trades? Where would we take the entries? If we would even look for a re-entry at
Yep.
this point. But you saw how similar our thought process has been throughout this entire series. If you go back and on either of our YouTube pages, you'll see our simulation sessions. You will see how similarly we think when it comes to fundamentals, when it comes to technical analysis, when it comes to market sentiment, but you will also see the subtle differences as well, right?
Oh,
So make sure that all the information that you're gathering here, modify it to fit your trading plan, modify it to fit your trading style, right? No one's going to trade the same exact way. We are the examples here. You're seeing that happen live. You're seeing how he would enter the trade, how he would manage the trade, and you've seen how I'm not entering this trade because for me, I don't have that confirmation. Or like after this point, if price were to continue and if I were to look for additional trades throughout the session, then how would I do it? Right? So you have seen us apply all the strategies that we've talked about in risk management part one into this part two into simulation sessions. How do you avoid over trading? How do you avoid involving your emotions into your trades, and how do you avoid over risking?
yep. And honestly, not that I wanted to take the loss, but I think that was better for you guys to see. I was actually happy that we took that, and that's why I entered that 1% dynamic risk so that you guys could see how do we manage this if this does go the opposite way, because there was a probability that this candle doesn't have a bottom wick, right?
Yeah.
So I think that was a great example for you guys, and I hope you guys enjoyed it.
Yeah, I think this was amazing because wins are a lot easier on your psychology, but once you start taking those losses, that's when a lot of people's psychology takes a hit. So I'm very glad that you took the trades that you did,
Yeah.
because that was a perfect example of how do you
Yeah.
manage
Yeah.
it
It's good
calmly,
that they saw that.
right? You wouldn't see us jumping around all happy and all this stuff if we had wins, and you're not going to see us throwing away like our glasses, our phones at the walls, or something like that, smashing our screen just because we took a loss, right? So how do you stay calm in both situations? Well, that was our risk management part 2. So thank you for watching, guys, and I hope you guys learned something and you guys were able to take away at least one new thing from this simulation. But feel free to comment below on any of our YouTube channels here, any of our YouTube videos. What else do you guys want us to incorporate into our series? And if you guys have any questions, just feel free to comment below. Or even if you like a specific part about the video, we want to provide as much content and value to you guys as much as possible, especially if it's personalized. We would like that more. We don't want to do like the same exact thing that you see on YouTube on 1,000 different pages, right? So
Exactly.
thank you so much. And I hope you guys enjoy the rest of your weekend, your day, your evening, wherever you guys are.